first, energy stocks logged their biggest day since January. The sector closed out of correction, and this following a major weekend attack on Saudi Arabia's oil facilities. If the outage is extended or if military action is employed in the aftermath, what could the further fallout be? Let's start with Mr. Adami.
Well, first of all, welcome. I mean, this is the first time you've hosted this show.
Yeah.
See that? We've had the, and
you're doing some heavy
I happen
lifting
to know
today.
your father's watching. So Mike Evans, your daughter,
Yeah.
what, the whole hour?
It's
not
Dave,
just,
but Mike
it's
is
Dave.
right.
Did I say, oh, I know Mike Evans. Why did I say Mike Evans? It's the receiver from the Bears.
Too bad we're live.
That is so great. That is terrible.
Guy, you are the best though.
Anyway.
And you get to go
So
first.
what's the fallout from this? Well, I'm surprised the market didn't trade off more. You know, over the weekend, I'm like, 25, 30 S&P handles. Easy on Monday. Airlines are going to get crushed. Big cap, these big cap integrated names and oil going to go much higher. None of it really happened. The S&P closed down 9 handles, which is pretty benign. Airlines down 1.5%, and Delta's recently off a 52-week high. So to me, this is actually a very encouraging day. And this is from somebody who's been bearish for a while and saying, you know what? You got to be impressed with the price action across the board today.
Encouraging.
Yeah, so I would say that's as regards to the market, right? So let's talk about the economy. Last week we had this pretty hot, this inflation print. And so when you think about this, when you see crude oil go up the way it did, and you see the dollar actually stay bid, to me, that actually poses some sort of issue. It could be a really interesting Fed day on Wednesday. What is the commentary going to look like right now? Because we know that the administration doesn't want oil where it is. They don't want the dollar where it is, and they don't want rates where they are. So this could actually create a pretty interesting week as it relates to macro. That being said, again, the S&P is always that thing that acts well relative to almost every other equity index that you see.
Does it change anything for the Fed decision Wednesday?
I don't think so. I mean, they've said that, the trade issues, that's sort of not really theirs to trade on. This is even more, it's more granular, I think, than that. So obviously, oil spiking this much, 10 years ago, this would have been a gigantic deal. Now it's a big deal, but it's not as big.
So 20 cents at the pump, let's say, which is what we could kind of see happen over the next couple of days. Is that the kind of consumer shock where you think they feel like they have to do anything in response to it? Or?
I don't think so. I guess it depends how prolonged that is, right? If you look at the curve, they're showing oil back down, in the 50s several months out. But I think the market's sort of poised. All right, we're going to have either another big leg down or another big leg up in oil or another big leg down. I don't think it settles in right here.
Interesting.
So, and my guess would be we actually see that push back to the downside as the dust sort of settles, Kelly, and we start to see some of this. I mean, it was amazing how many options we saw trading over the last 3 or 4 days of last week coming into what had turned out to be a drone strike. Oh, my goodness. It was absolutely, from Occidental, you go across for the XOP, XLE, all these various names. We had seen nothing but bullish activity. And it all came, and specifically it went to some of the very, very far down, the ones that are extremely shorted, Oasis and some of these names, Whiting Petroleum. Those names were absolutely attacked in terms of buying upside. Well, they profited very, very well today on what we saw over the past week.
What did Whiting close up around 50%? Was what I saw during the session today. Again, you said heavily shorted, some caveats there. But what now? I mean, are those names where it says, okay, this is a short squeeze or some kind of move like that, and if you're bearish on energy, then you have to get out as quickly as you got in?
I would say that the short squeezes only last for a number of days normally, I would say. So
kudos to Pete. He was in them.
I was lucky enough to be in these, but only because I'd seen all this activity through our algorithms that search for that. But it was just amazing, Kelly, and I would say it's very short-lived. And the reason I say that is when we've seen stuff like this in the past, whatever the sector might be, it works for a little while. But the big scheme of things, we're talking about oil, which I think if you look out further on the chain, oil looks like it's going to be going back towards the lower end at some point.
And you see that, Karen, already with backwardation.
Yes,
price drops into the 50s a couple of months out.
Yep.
Even if it's the case that this hangs on for, whatever happened today, the fact that we're only talking about the biggest day for energy since January is pretty shocking. Why weren't there bigger reactions for some of the big cap oil and gas names?
Well, look at the range just in crude, which started trading last night. When you look at, I was actually looking at the USO, which is the ETF that tracks oil. It really there was no real call buying in that last week whatsoever. So I think that crude came in last week, right? It was down from the high 50s to the low 50s. You might have seen some activity in some of these very levered names, and it might have just been very single stock related, but there was no big bets in crude futures and options on crude futures or in the underlying ETF that tracks the commodities. So to me, me, it seemed like very specific. I just want to make this point, though. You talked about what does it mean for the Fed, and we're going to see. When we got that mid-cycle adjustment, they specifically talked about tariffs. Now, they're obviously right now the market has found a bid, at least stock market, because they feel like that at least the rhetoric has been dampened a little bit about new tariffs. But we have oil higher now. We have the dollar bid, like I just said, and we don't have a whole heck of a lot of clarity about what's going to happen here. So, there is a shock that could happen if they don't actually cut. I mean, can you imagine what equities would do right there on Wednesday afternoon? That would be something that I think would keep.
But you think that would be a plausible response to to the oil price action we've seen?
Well, I'm just saying the data's been okay, right? So if the data's okay, and if the only reason why they did that mid-quarter adjustment was because of tariffs, and right now we're more optimistic about that, I don't know, what does this oil shock do to the economy?
But Guy, to your point earlier, which is that you're surprised that in a way it's not more extenuated
100%.
Today. Not only do you have the kind of headlines we don't get out of the Middle East that often, but you have energy, which would be shriveled to be the smallest sector in the S&P coming into this.
6% of the S&P 500.
A total dog. I mean, you had the perfect setup for a major pop. And yes, you had a pretty big one, but it was relatively contained. What does that tell you?
Well, it tells me maybe the global economy is as weak as people suggest that it is, and maybe oil's not as important a commodity as it was 10 years ago. And you're talking about the biggest supply disruption in history. And again, the S&P, basically at its all-time high, is down 9 handles. I mean, that is a remarkable performance to me. Airlines, which should have gotten really obliterated today, 1.5%, 2% across the board, that's not bad. So I look at this and say, understanding that the situation in Saudi Arabia is going to go on for quite some time, it's take a long time to get back online. But the market is saying, you know what, it's not a big deal. I'm encouraged by the price action. And again, I preface this by saying, I'm probably one of the more bearish people on the desk.
Yeah, but still, the longer it lasts, that's where you start to see the projections go up for how much the impact there could be on the oil price. A couple of other places, as you heard Jim Cramer talk about earlier today, the defense names. Is that a place to go if you think that the next moves here involve the defense stocks? You mentioned the airlines. American at one point was down 5% earlier.
I mean,
it closed down more than that, I think.
That one in particular.
Yeah.
I mean, people. Right. Okay, so maybe they're not all carried out across the board, but Texas banks, by the way, I've seen people saying this is bullish for the Texas banks, Comerica and the like, because you get a better profile of the companies that they're exposed to for the time being.
I would have thought we would have seen more of a response in the defense stocks. Pretty muted. Right, and pretty muted. The energy, the XLE, pretty muted. So I mean, the market's telling you this is just a, kind of a, not a giant, big to-do. It won't turn into anything much bigger than this, and that the economy will keep humming. Well, I was looking at some of the airline. I mean, a lot of them are not hedged. That's not great, but business is still pretty good. I don't know. I don't get it exactly.
That's a more hopeful read on the consumer than I guess.
Actually, I thought we would I thought we'd see a much bigger response, even just because the market's so high.
Well, the defense stocks, though, have already had a pretty good year coming in. So I think that's part of it. Is some of it sort of almost priced in right now? I think, Dan, back to your point, though, about looking at oil futures and the USO and some of those, I think when you look at the liquidity right now and the leverage that you get from a lot of these equity names that people can trade, I mean, quite honestly, what we'd seen last week when I talk about something like Whiting Petroleum, they're buying the September 9 calls for 20 cents. Today, those went to $2.
Wow.
I mean, you want to talk about movement, and somebody buys 6,500 of those, and then they pile on after that to buy a few more. That's what I'm seeing in the markets right now, and that's why I think they're looking for leverage. They're looking for ways to be able to play what they see coming forward in terms of energy or whatever the space might be. But the defense stocks are really interesting. As a matter of fact, later on, I got a pitch. I might have one of those names in there.
That's a
Giddy up. That's a teaser.